Alright traders, welcome to another Easy Markets update. This one's going to be a little bit different to the ones we're doing at the start of the European session because we're going to be looking specifically at the key piece of data for this week, and could have a potential piece, a big impact on next week's data as well. We have the US CPI coming out tonight. So the US inflation numbers last month, they were 6.2%. The whole market went crazy. When the Fed Chairman Powell went to the Senate and the House committees, and they asked him about it, he basically said they're not going to use the word transitory anymore, and there's signs that it may be more stubborn, the inflation they're getting, although they're not seeing. Their base case still is that it will ease with the supply crisis. But that being said, tonight's number, so if you look at your financial calendar here on the left, tonight's number is expected to come in at 6.8%. Okay, it doesn't have the forecast here, but that is the forecast, 6%, 6.8%. The month on month is forecast 0.7%. Okay, so that's higher than last month, but by a lesser degree, right? So a little bit slowing in terms of the speed of the increase of the inflation, but definitely still very high. And adding 0.7 to the month on month does creep this one higher, the year on year, and 6.8% as the forecast. I can imagine if they were excited about 6.2% last month, they'll be really excited about 6.8. Now, is that number realistic? I mean, yeah. I mean, when you get into these levels of such big numbers, I suppose that they can come in a little bit different to expectations. So last month's was actually a lot hotter than expected, and although this month is expected to be strong as well, I mean, it wouldn't surprise me if it was off by 0.3. It's not the same as when you have your inflation at 1.1, right? Like, it's pretty easy to know it's either going to be 0.1 or 0.2. And back then it didn't really matter because it was not a consideration. Now it's the main consideration globally for central banks, right? Inflation. So this number, you don't want to underestimate how important it is for the Fed meeting next week. The market's already expecting that there's a good chance of tapering to be accelerated at the next meeting. And if this number confirms that or comes in, anything above 6.5, I suspect that that's going to be a narrative that gains more traction. It would have to be a devastatingly weak number and a huge surprise if we were to see any significant change in the expectation from the Fed. So the risks are definitely skewed tonight towards US dollar strength. Also, because of the movement this week, and there's been some large rallies in, say, the Aussie dollar, and so this is the daily here. So this is where we opened on the week, had 3 large candles, settled down for the last 2 days, and that's pretty much the whole market. But you can see that we're not that far off highs, yeah. But everything is still. It's not like we're at highs right now. So there's targets to the top side. There's targets to the downside for the euro, and for the dollar yen. This is a big night because dollar yen's very sensitive to this whole argument. So the trade we got currently running is long dollar yen at 113.40, stop at 112.40, and the TP we really want to see a test of 115, and if we can break 115, then that would be signaling that we can get even higher, and then the topside targets there are eventually 118 to 120 if the Fed starts hiking next year. So this is one of the favored ways of playing dollar yen. The good thing about this is if it's slightly weaker, the immediate reaction might be lower, but maybe 20-30 points. But if it doesn't change the big picture, so if you say it's 6.5% and market one is 6.8, and immediately drops down. I mean, is 6.5 going to be an okay number for the Fed? Probably not, right? I mean, there's probably still going to be very concerned about it. And is the media going to be talking about it all weekend? Yes. Is it going to be talked about on Monday, Tuesday, Wednesday? Yes. And anything that is focused, especially as Omicron variant has subsided a little, anything that has really changed, well, anything that continues the narrative of inflation and the Fed potentially raising rates, then you can see it's easiest as long as stocks don't crash, which is going to be our secondary thing that we watch tonight. So first thing we watch is the actual number, right? Little bit weak. Reset chart. If it's a little bit weak, then expect the dollar yen to drop down. If it's strong, straight up. Okay. Then there's an hour break between the numbers coming out and the Dow opening, the US stock market. So what I would be looking at there, as long as the Dow on a strong number is not down more than, say we're not, below 35.5, then probably it's okay. The stock market's absorbing it. But if it goes below that, then the rally that you're going to get, initially from dollar yen has a good chance of being dragged lower by the risk of sentiment. Okay. Now, if stock markets don't fall sharply or don't fall below that, that previous low here, then we could just use this all as a little bit of a well, basically you let your dollar yen run, because right now it's on special after being pulled back with Omicron scares, and this, if it's going to be the favored way, then next week you can expect gains as well. Okay, so it's sort of a launching pad trade where we can get long into the Fed and then look to hold. So get long now before the CPI, and if it's strong or if it's not weak enough to change the game, then we still want to be holding it next week. Okay. Now these trades here aren't really part of the plan. So Aussie yen, it's going to be too dangerous, I think, to manage a couple of trades at once. Kiwi disappointed me a little. So we bought this last night looking for a squeeze above the previous high, and we didn't really get it. Okay, there wasn't really follow through on stock market or anything. I don't really want to have any US dollar short exposure tonight, even though it can go either way, right? I just think that the US dollar has some chances here to be playing on the long side. So I'll leave a little just straight dollar yen and then look to add to dollar yen either lower, okay, if it's a weak number, I'll buy it as long as stocks haven't crashed. Well, stocks won't crash if it's a weak number. Stocks should like a weak number, because as long as it's not too weak, right? Like as long as it's higher than 6.2, yeah, then any dip is going to be a buying opportunity in my opinion, because the risks are skewed so much towards the Fed being more hawkish now that the change in tone and language from Powell was so sharp that you really have to expect that there will be some follow through with this Fed meeting. And this is a Fed meeting where you get the dot points as well, so you get the sort of the 16 members where they expect interest rates to be, and that can give you a little guide to how much it's changed since the last time. So two meetings ago, they only release it every 2 meetings. They can update their forecast as well. So there's a lot of information coming out with the Fed meeting where they could pivot to hawkish or change their language to accept a higher chance that this inflation is more of a serious situation for them. If they don't do that, they're going to get reprimanded more and more. Republicans already very up in arms, and Powell just got reaffirmed, and then changed his tune. And so before he had that change of tune, he had meetings with Biden, meetings with Manchin, and the change of tune was so strong from Powell at the Senate committee that it's almost like he told them that, okay, we're gonna try and focus on inflation and take it more seriously, blah blah blah, right? Or at least let the market know that they will fight inflation if it gets out of hand, and try to control those expectations. But that being said, he's probably not going to promise anything with rate hikes or anything, right? Like we can't get too excited. But the market itself is moving higher in the bond market as well. Okay, and that's the third thing that you really don't have to check the bond market that much tonight. I know it's a little bit like, whoa, how the hell are we going to do that? What is the bond market? But the most important thing is first the number being above 6.2, as close to 6.8, right, as possible for the rally to continue. Then checking the Dow, is it freaking out? Because the chances of the Fed doing something aggressive increased. Just how much of an impact the Dow is going to have on that. If it's below this, there's a problem, and the profit we're making you should take. If the Fed doesn't matter, we let it run. Okay. If it's a strong number and the Dow doesn't fall, we probably want to be looking to buy more for next week, and looking to hold into that Fed meeting. And the potential for it going absolutely crazy, or this turning into a huge rally, is pretty real. So I'm pretty excited. The market has been quiet for 2 days as we prepare. Well, it's quiet today and it's quiet yesterday in the Asian session. And it's, I think, just everyone wants to see what this number is. Now, gold is interesting. Gold last month, when inflation came out strong, went up $40. So the 10th last month, $40 on the 6.2%. Now gold has sort of been under a lot of pressure with that Fed change and the interest rates increasing in the short term. But if it's going to be an inflation hedge, then we'll see tonight. Okay, if it doesn't perform again, then we can no longer trade it on the long side, expecting it to be well supported in a global inflation or reflation for next year. Okay, it's not the same trade anymore. So just keep that in the back of your mind, ready to drop your trades, or just be very careful actually trading gold. It's acting a little irrational. It doesn't really know what it wants to do. In terms of how it's going to affect the risk currencies, well, I mean, they can be well supported by the Aussie yen and the yen crosses, but really I think the make or break here for whether the Aussie can hold up against a strong US dollar is whether the oil and the Dow continue to remain strong. It's probably best to not trade risk-sensitive currencies tonight until we see the reaction of the stock market. Yeah. So pre-game, I mean, if you're going to gamble, right, you could gamble on it being a strong number and stocks falling and the US dollar getting strong and the Aussie getting hit from both strong US dollar and risk off from stocks. But I mean, that's a big combination that you want to happen. And if it's slightly weak, then you'd expect something like stocks to go up and Aussie to bounce up, and then in that world it can challenge and hold and be a little bit stubborn. Now the bond market, you can find them on TradingView, right? So if you're watching this on TradingView, you can find the bonds as a interest rate, and that's really probably what you want to be looking at. It's just crept back above 151. Dollar yen hasn't really been tracking this as high as it's been moving. The movement in the front end has been a little bit stronger. That means like the 2-year has been a bit higher, a bit more punchy since the Fed Chairman Powell. The 10 years have been pretty subdued, but if they start to creep higher, they're the more sensitive ones for the dollar yen, because dollar yen's 10 years are very low as well. Yeah, so this is actually creeping higher now as we're speaking. Probably will be well supported. I can't be the only one who's got the same idea. But this trade isn't overly crowded either. So it's not like we're at 118 saying, "Oh, we're going to get to 120, guys," and haven't had a pullback. We've had our pullback, from 115 because of Omicron. So this is a different potential now, right? The chances of the market resuming its rally for moving past Omicron and getting back into dollar yen is quite strong. So hopefully that's a little bit of a trading plan for you, yeah, for tonight. Focusing on one pair does have some benefits. You don't have to, be checking too many charts too quickly. The other trade that, just as a side note, the other trade that's on the back of the mind here is that Euro Pound has had this nice rally on the back of UK having some potential Plan B secondary lockdown. Well, not lockdowns, but COVID restrictions put back into place. The pound's been under pressure, but generally the Bank of England next week is much further along. Much closer to raising rates than the Eurozone, and this is one of my favorite trades, selling these rallies. So I can't believe I missed the 86 test. Alright, well look, we'll come back to this guy next week, guys. And we'll be doing the normal streams next week, so it'll be just before the DAX open. And we'll be guiding you through, hopefully, this trade as it develops, because it's not just, it's educational to say, okay, we've got a trade idea, this is why we're doing it. Things, what's the text look like? Not bad. But, it's not bad at all. It's an uptrend, right? This is, we're on the right side of the game on that front. But also seeing how a trade evolves as the story evolves. And if you've never seen a pair move 500 points over the space of a couple of months, that's the sort of trade we might be developing here. And so I'm going to try as hard as I can actually not to close this one, just as a little bit of a flagpole, because if it does start its big rally, its next leg, it'll be a good little anchor to come back to every now and again and say, hey, you remember that stream where we're talking about US CPI after Omicron fears died down? Well, look, for this particular trade, Lawrence, the stop is below the swing low, right? So, this is a big stop. So this is 100 points. The top side target, though, for me, 115 is 160 points away, so that's decent. But really, it can go a lot more. Now, why not just put my stop up there? Because if it falls, I'm probably buying more. Yeah, and so it's not really a big position, and it's also, the chances of the market pulling back are real, but the chances of the market exploding higher are very real as well. Okay, so it's not something that you can't have. I mean, you can wait until after the numbers come out, but you're going to give up a few pips either way. So yeah, this is just the first part of maybe a 200,000 exposure trade, and that's how I'll be treating this. Alrighty, so this is going to be an exciting night. I wish everyone luck, and we will be discussing it. Actually, not Monday, because I have a special function on Monday, but Tuesday for sure. We'll be running through everything that's going on, and hopefully the dollar yen's well above 114 by then. Yeah. Well, I mean, it might be straight up like last month, but it's because like we said at the start there, that 6.8 number, it's much easier to be wrong when we're getting to high numbers, right? And that's that's why it might be off by 0.3 or 0.4. But you can imagine if it's 7.1, right? Like, it's going to be hard. It's going to be hard to care about anything else except for the Fed. But yes, guys, and we will go back to some of our other trades that we're doing, like yen crosses as well. The yen crosses have a lot of potential here to rally. Pound yen in particular is begging. It's now got 3 high lows, and this is such a big support area. Yeah, like if I had to do a gamble trade, one trade right now for 6 months, it would be long pound yen. And I mean, if trading was that easy, I suppose everyone would just do it. But it's there's many pathways in which this thing's going to go a lot higher, and I think there's not as many pathways where it goes much lower and doesn't come back up. Yeah, so it's one to be watching, but definitely technically not there yet. It's just a nice sort of support zone that it could launch off. Much better technically is the Aussie yen, which is already broken above its previous sort of resistance and starting to get its rally on. But this one's very sensitive to the stock market. That's why we don't want to be running it into tonight. Yes, yeah, the most oversold. Okay, but the pound just ran into another problem, so it couldn't get the Omicron rally. But that problem will subside. If it's a 2-week masking for Christmas, that's the market will look forward past that. In fact, next week is probably where the pound can rally most easily before the Bank of England meeting, because there is growing consensus they're not going to raise rates this time, but they may indicate they're going to raise in January or February, and that's a great thing to have as a tailwind if you're looking for a currency to change direction. Let the central bank slowly get to where it's raising rates, and then you can have a lot more support come through. Well, that is the theory anyway. Alright guys, well, best of luck tonight, and we'll be back on Tuesday at 6:45 PM Sydney time, so 15 minutes just before the start of the DAX. And I may update the comment section here later, and let you know if there's something, if it's a crazy number, but I think you're going to see the reaction in the market yourselves. Alright, cheers guys.